What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 9th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we have got a lot of things to unpack for this update. There is fear across the board in practically every major asset class. Taking a look at crypto markets, most cryptocurrencies are down anywhere from 10 to 15% over the last 24 hours, and in traditional markets, from stocks to commodities, we're seeing record sell-off levels that we haven't seen as far back as 2008. And when it comes to treasury markets, which we've been discussing a lot about on the channel, we are seeing yields continue to fall and set themselves on a pace for negative yielding rates on the bonds. So we have got a lot of things to unpack here, guys, but I want to let you all know real quick towards the end of the video that we're not only going to be announcing our winners for the TaxBit contest, but we're also going to be having a sponsored interview with Austin Woodward, who's one of the founding members of TaxBit. So stay tuned for that. You won't want to miss it. But let's go ahead and just dive right into it, guys. In the sense of cryptocurrency markets, we can see here, even by just taking a look at the top players here, there is no one escaping this downward pressure unless you're a stable coin, right? Stable coins right now holding up here across the board, all the top names here, stablecoins in the top 100. But we can see here, looking across the cryptocurrency market, most cryptocurrencies are selling off in double-digit territory. Now, this is definitely concerning to me at the end of the day, guys. And as we take a look at Bitcoin here, again, we want to watch to see if in the next 24 hours we're going to be holding this level. This is a very, very important level for Bitcoin to hold because it's the logarithmic line of support that's been holding all the way back here since November 2015. So I do want to see this hold here. Again, if price pushes a little bit outside, I'm not going to be too worried, but if this starts to drop to say 75 or 7400, this would deeply concern me in the sense of the state of the crypto market. But long story short, nothing again too fearful. Major thing here again in our long-term picture is to see this hold within this range here and eventually break out sometime later in May. Now the nice thing is we're not just simply exposed to Bitcoin. In fact, we've been mainly exposed to altcoins over the last 24 hours. We've been exposed to altcoins for the last couple of months, right? As we've been betting on this call since back in around August and September of 2019 that we were seeing a reversal and dominance. And if you right now are exposed to some of the top plays we've been talking about, such as REN, for example, REN is breaking out to new Bitcoin comparative highs that it hasn't seen since back here in August. We've also got plays like XRP picking up steam, but really the ones that we've been talking about are Link and Kyber Network, which are riding towards their Bitcoin comparative highs. So in this case, I'm not too worried. I'm riding out a little bit of the storm, guys. Again, the major thing here that I want to emphasize with Bitcoin, just to keep it simple, sweet, and to the point, is that right now, we're focusing on Bitcoin dominance. We're seeing whether or not this is going to continue to rise or start to continue faltering over like we saw in the past. And then also it's a matter of Bitcoin holding here. And so long as we do those two things, we're positioned perfectly fine in the market, guys. So those are the key things that I would say to watch for. And again, keep your time horizon on a much longer term time frame. Don't FOMO, don't FUD, don't get caught in the emotions, guys. You guys know it's the best thing to do is just to simply keep rational when it comes to these markets. But I want to go ahead and explain why it might be on a fundamental basis that we're seeing this pullback in price. I think a lot of people are like, this doesn't seem natural. Why are we seeing Bitcoin drop like this? We have the halving coming up. We have a lot of positive things. Well, it might not just be that there's global fear in the sense of traditional markets, and that might be having a weighing effect on crypto, but it might actually have to be that there's an actual sell-side pressure that's pretty much guaranteed to hit us eventually. And that is the PlusToken Ponzi scheme that stole a lot of Bitcoin and other cryptocurrencies, and it might be the time where they're finally looking to liquidate it and finally move some of that money out, laundering it, and eventually exiting it out to cash. At least that's the key objective that these guys are probably going to go through in the long term. So as far back as a couple of days ago, back on March 7th, it has been rumored in this case that PlusToken had been mixing a lot of funds here. Sorry, the article's, there we go, it's loading. But you can see here in this tweet by Ergo, they basically tracked it over 13,000 Bitcoin. In this case, it started to move around in this case. And you can start to see the actual mapping here on Twitter, which is really interesting. I like the data science of actually being able to see how this is actually moving around. But it's a lot of cryptocurrency funds, guys, that it looks like they're starting to plan and move to a variety of exchange accounts and hopefully try to sell, all right? So anyways, again, this is going to no doubt apply some sell-side pressure, especially if they have conduits where they can start to sell this Bitcoin on Asian markets, where there's a lot of liquidity and there's a lot less regulation on what gets to be sold and bought. And it's no matter what going to have an effect on traditional markets because it's going to initiate a large offset of supply into the market in a very short period of time, which always sets a decline in price. So again, That's why I think we've been seeing this over the last few days. I don't know of any other reason to sell this much Bitcoin in the short term, not to mention on spot exchange. So again, that's a key thing to take into mind. All right. So now that we've keeping that in mind, we've talked about crypto markets. I'm not fretting too much, guys. Again, we're still a decent amount up from where we were back a couple of months ago. Not to mention as well in the grand scheme of things, right? We're pushing back where we were back here in May and stuff. It's not a big deal. So again, we're still holding up at a much higher level here and setting higher lows, which is really what matters at the end of the day. But the major thing I want to talk about is what's going on in traditional markets. The major indices right now are experiencing a dramatic sell-off. And if you really factor what's happened over the last couple of weeks, we haven't seen this kind of sell-side pressure since as far back as 2008. I think the only other time we could say that we had something similar is maybe back during August of 2015 when we were having a flash crash. But this is substantial downward price movement. This isn't happening over a very short-term sporadic period. This is happening over a course of a few weeks where we've had a solid dead cat bounce where prices have already rolled back over to new lows here on the NASDAQ. Take a look here at the S&P 500, new lows coming back down to where we were back in August of 2019, right? Again, fading out practically all of these gains here that we got. And this is coming at a perfect time here because we got near the 20 to 25% that we expected after the yield curve inversion. As some of you might know if you stay tuned to the channel regularly, and if you don't, I recommend you hit the bell icon and subscribe. It always means a lot to have people join the family, guys. But in the sense of the yield curve inversion, where you start to have higher yields on the shorter term treasuries than the longer term treasuries, which happened back around this range, I think back in May or June of 2019, tends to be that it's a multi-month basis and a near 20 to 25% return that we get before we get the correction and the recession. And now we finally got that rise up in prices. We had that time period afterwards, and now it looks like we're finally setting up for recession with the mix of, the thing that's sparking global fear across the markets, and I can't name it, but you guys know exactly what I'm talking about, the thing that's spreading across the world right now. Right. So again, it's a very tragic time. Again, I don't like to see this, guys. This isn't something really that I'm championing or celebrating. It's just something that we've been calling for a while on the channel. We've been prepared for. Now, the thing we're seeing here, though, is that we're seeing all asset classes not doing well. Cash is king right now because if you're not in stocks, you're likely in some other form of market. Crypto, not doing so well, obviously because of the fundamental side of the PlusToken Ponzi scheme, but also probably some people selling into some of the fear here. And then also for commodity markets, boy, I hope none of you guys are in oil right now. I've been talking a lot about this. I mean, again, not trying to say, I make all the right calls. There's a lot of calls that I make that are wrong in the past. But this is something I've been vehement about. For those of you who are subscribed to the Dash Report, for those of you who have been following me on the channel and watching every single video, you guys know that I've been talking about oil entering into a bear market where it's going to be cycling between $20 and $40 a barrel over the next decade. And it looks like we're finally getting that now. We're finally seeing a massive glut in supply, not only currently materialized in oil markets, but we're seeing OPEC ready to bring prices down as far as $20 a barrel. Because for them, they can still maintain cash flow and still maintain a sense of either neutrality in the sense of their profitability or still make a profit in some regions. So OPEC is ready to go to war here in the sense of oil. And take a look at the overnight drop here, guys. Absolutely insane. I'm going to turn off the volume so you can see it here. Going as far down as $41 a barrel, already going down from $63 just back in January at the start of this year, downward towards $32 with a low of $27 per barrel. This is absolutely insane. We saw prices dip below, back down towards the range that we hadn't seen since as far back as here in February of 2016. This is crazy stuff, guys. This is absolutely... it's absolutely bonkers. It's like this is so much stuff culminating at once. This is detrimental to no avail for a ton of U.S. companies. This is what really makes me sad. It's going to lead to a lot of layoffs in the economy. And this is going to lead towards a lot of oil producers in the U.S. where we've become energy independent. We've spotted new masses of reserves in the U.S. for oil and natural gas. Now there's going to be mass layoffs. There's going to be mass cutbacks on production in the U.S. And we're going to become a lot less energy independent because we can't sustain at these prices. Now, it'll be good for consumers in this case. When you're filling up at the tank, oil is going to be dirt cheap. It's the cheapest it's ever been in history if you consider inflation over time. We've never seen gasoline this cheap. We've never had this kind of glutton supply before across the globe. So in the sense of abundance, it's a good thing. But in the sense of price action and the stability of U.S. energy production. This is terrible. I mean, you can take a look when the market's open here in the next hour. You can take a look at the XLE ETF for energy producers. You can take a look at the large producers like ExxonMobil, or you can take a look at the smaller producers, and you're just going to see double-digit declines across the board, guys. It's not a good sign. Now, we talked again about this on Twitter. I posted this chart here. If you guys want to follow me and keep up to date again with some of the updates that I put out, definitely follow me over on Twitter. I put out updates in the sense of the coronavirus, the drop in equity markets. We were talking about how this was cautious back here in late February. And along with that as well, again, we have all kinds of different updates that I think you guys would find interesting. And not to mention, it's just a good kind of medium in between me posting content on the channel. But let's go ahead here. I want to talk a little bit about what's going on in traditional markets here. So, you know, we talked about the dive in equities. We've talked about the growing fear across the board. Well, funny enough now, it looks like prediction markets are saying that there's a 71% probability that the Fed will not only drop its federal funds rate over the next meeting, but I don't want you guys to misread this chart here. I want to be very specific about what this says. So many people will look at this chart and they think it's say that it's they're guessing that the target rate is going to be dropped by a 0.25% or maybe 1.25%. No. The prediction market is stating that anywhere between the 71% who believe this is going to 25 basis points or the 28% that believe this is going to 25 to 50 basis points, they're saying that that's going to be the absolute rate, meaning that they believe that it's going to 0 or 0.25%, right back to where we were back in 2016. 71% believe that's going to be the rate at the next meeting. This is calling for a 100 basis point drop, an entire percentage point off of the Fed funds rate, basically bringing us down to where credit's basically free. If you've got something that brings you a guaranteed income, here's some free money. Have at it. We're back to where we were. We cut back on everything that the Fed had worked on over the last couple of years. And we're right back to the same point that Janet Yellen and Ben Bernanke put us in. Well, and then also let's give Alan Greenspan a little bit of credit for it all as well. So, what is this going to do to traditional markets? Not just stocks, right? This might be able to maybe provide some short-term relief for equities, but we know what's really been driving it. We know that stock buybacks have been the thing that are driving equities. So if this Fed stimulus can't fix corporate earnings, which we're obviously seeing a massive decline in sentiment right now, meaning that people are expecting that corporate earnings are going to have a severe decline, specifically in travel industries like airlines, from travel industry players like, for example, Carnival Cruises, and we're also starting to see a mass decline in the energy sector. So enough of these dominoes start to fall. The Fed stimulus isn't enough. The buybacks are going to decline, and stocks are going to decline no matter what, right? If there's enough of a shock here from, what's been going on across the world right now that's slowing down economic growth, well, this isn't the only thing to be concerned about. See, when the Fed drops interest rates down to 0, there is a near direct correlation and an increase in bonds in the sense of their underlying value, and a rapid decline in the yield of those bonds. So we're taking a look at the 10-year right now. The 10-year yield has dropped from back here in mid-February around 1.5% down to 0.46%. And just a couple of hours ago, the yield was nearly double that yesterday. We've just cut the yield in half again. So I mean, this is, I want to, in a sense, I'm kind of like, in a nervous way, laughing about it, guys. This is serious stuff. I mean, this is uncharted territory, right? We have seen the yield on treasuries down at this range before in the past, right? We saw it in the sense of the shorter term yields, not here in the 10-year, right? We've seen it here in the shorter term yields, like the 1 month and the 3 month and the 6 month, back when the federal funds rate was around 0%. But we're looking now to see something we've never seen before. We've not only never seen this kind of yield on the 10-year or the 20-year or the 30-year, but we are about to see these bond yields enter into negative territory across the board. The ramifications of the treasury note, the most safe haven asset on the world of finance, going negative. This is unheard of, guys. This is meaning that we're going to go towards a period where your money in your bank account And we're going to negative interest rates under the Fed. This means that the Fed funds rate is going to make it where if you have money deposited in the bank, you need to pay the bank to store your money. But also at the same time, in the wacky world of finance, you can now take out a loan and get paid for taking out a loan and losing money on whatever venture you're taking that money out to go spend on. It's insane. It's insane. It doesn't make sense. And now you're having to pay to take on a government promissory note that they're going to pay you back in the future. No, actually, scratch that. They're not paying you back in the future. You're expected to pay them a yield. I mean, this is just, it's crazy. So if we take a look here, we'll take a look at the U.S. 2-year. In this case, sorry, see if I can get the rate. U.S. 2-year. Let's see if we, there we go, government bond 2-year yield. Take a look at this, guys. Right back down to where we were back in 2011. This is dropping like a rock here over the last 3 days. Once was originally at 1.36%, now down to 0.27%. Right near negative territory. Guys, I mean, this is scary stuff. I'm curious as well if right here on TradingView we can actually get the 1 month. Let's see if we can get that on here. Let's see here. 1 month, 1 month. No, I'm not seeing it here. Again, I might be missing it, guys. You'll probably be able to see it after I've done the video. We could probably actually just pull up the yields here real quick. I'll go ahead and do that real quick. So the actual Department of the Treasury has not updated their numbers yet, in probably one of the most like severe times in history. But again, I guess they probably don't have someone working over the weekend, so that's probably why. But we'll have to see here, guys. I think the yield, if we were just taking a look at the 2-year being down as much as it is, I don't even want to know what we're seeing here, you know, in the 1-year yields, the 6-month and the 3-month. This is scary stuff, guys. This is really, really scary. Along with that as well, TLT, you know, you take a look at this is the ETF here that tracks the 20-year Treasury. This is the contrast here between the yield and the underlying bond price. Traders of the bonds are doing great, right? You know, they're really benefiting here in this case about the principal price of the bond going up, right? And we can see here Treasury is moving up at rapid pace. Again, we haven't seen Treasuries rally like this in a very long period of time, breaking out of the normal channel that's been here since back in 2007, showing that we might be going in for the peak of a bond market, right? Where yields will finally normalize inevitably, because I don't think we can live in negative territory forever. It doesn't really make sense. And eventually these bond prices will have to go down. And it's going to be a huge hit either way, not only in the sense of people getting penalized who are holding these through the yield, but they're also going to get hit at a double whammy in this case, right? They lost money on the way up because they were taking on the negative yield of holding those bonds in their portfolio. And then they're also going to get slammed when traders start to sell them. Rates normalize and the yield normalizes, and then the price goes right back down here towards the long-term support line, or if not worse, right? So anyways, long story short, even taking a look at gold, guys, just for kind of a final summary here, gold's not even doing that great. It's holding up. You know, it's acting a bit as a hedge here. Silver, yikes, guys. I mean, silver is not even doing that well. Silver's down nearly 3%. So all in all, I mean, cash is king right now, right? We can see that in the crypto space. Cash is king. People want dollar exposure in these risky times. They want a hedge. And quite frankly, guys, for me, I haven't changed really like any of my major crypto positions. I'm not fretting about the moving crypto markets because, again, my time frame is over the next year or two. Where am I going to want to be exposed if I know that the halving is coming up, that most global markets are seeing an exit of massive capital, and they want to get themselves exposed in a new asset class that might provide some risk, but also a hedge in a sense, in the sense of being able to get out of the traditional systems and traditional markets, things that aren't tied to world economies, and things that can hedge in times of risk and fear, right? And I think that's not only gold and silver, I think it's Bitcoin, and I think it's cryptocurrencies alike. So again, keep focused on the long-term view, guys. Don't get caught up in all the noise. But at the same time, I got to be honest. I mean, this is an incredible period of time here for global markets. No doubt about it at all, guys. So if you all like the video, please drop a like. That all being said though, guys, I want to go ahead and announce the winners of the TaxBit giveaway before we dive into our interview with Austin Woodward from TaxBit. So for the basic package plan, we are giving that away to Brian Klein. So congrats to Brian on that one. Along with that as well, for the Plus package, in this case, we're giving it to Anna Chow. So congrats, Anna, on winning that. And then for the third and final Pro package, we are giving that away to Michael Perez. So congratulations to all the winners. And for those of you who didn't win, guys, I want to first thank you guys for entering into the contest and just remind you that there's always a discount code down below in the description where you can get a discount on your tax package this season. All right, so let's go ahead and we'll dive into this interview with Austin. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with a good friend of mine who I've known as far back as 2018, and that is Austin Woodward, who is a part of TaxBit, one of our major sponsors here on the channel, and they're one of the best software platforms out there to help automate your taxes this cryptocurrency season. So Austin, thank you for making the time, man. I know a lot has been going on for you over the last year, and boy, has it been a ride, man.
Everyone's favorite topic, taxes. I'm back, guys. I'm happy to be back, Nicholas. Like always, huge fan of your show, and keep up the good work.
Well, Austin, I appreciate you making the time, man. I always kind of joke and stuff, like when I talk about the TaxBit team and the platform you guys have built, I'm like, man, they've made like one of my least favorite parts about the world of crypto, like very easy, very simple, and they're just a bunch of great guys. So, I mean, you guys honestly have been doing a lot of great things for the space. You've helped simplify what is probably one of the most complex financial industries for taxes. So I'm really excited to kind of dive not only into the platform, talk about your guys' journey and some of your big milestones you've hit, but I really want to start off by talking about the big changes this year. I know you guys are in direct contact with a lot of the people who are helping to shape these laws. So can you give us a little bit of an understanding as to what is different in 2019 versus 2018?
Absolutely. 2019 was a kind of a pivotal year for cryptocurrency taxes. You see the IRS sent out tens of thousands of audit letters. They issued new guidance in October. That was the first new set of guidance since 2014. And yeah, happy to just kind of summarize some of those biggest changes. Well, as far as the new guidance goes, the biggest change that resulted from that was they clarified different cost basis assignment methods. And I'm speaking in crazy terms here, but to simplify that, prior to this year, they've been kind of silent on what do you use. When you go and you dispose of a cryptocurrency, do you take the first one, first in, first out? Do you take the last one? Can you specifically identify? It was all up in the air. Well, everyone knew that first in, first out was the IRS's default method, and that one was safe. And that's what TaxBit facilitated for 2018 and prior. Well, beginning 2019, they clarified and they said, hey, we're now allowing an additional acceptable method called specific identification. As long as you can meet certain criteria, which our software meets on the back end, it all revolves around record keeping and transaction hashes. But to put this into kind of educational or like first grade terms, say I bought one Bitcoin for $10,000, and then I bought one Bitcoin for $20,000, and then a few weeks later I sold one Bitcoin for $20,000. So which one of those first two Bitcoins can I pick? Do I have to choose the first one, which I bought for $10,000, which then I would have a $10,000 gain, $20,000 that I received, less the first one that was $10,000, or can I pick the second one, which I bought for $20,000, and then I sold for $20,000, so I'd have zero gain? Well, the IRS now says, yes, you can specifically identify that you can choose that second lot. And that's exciting for crypto taxpayers. That actually minimizes the taxes that we pay. It basically front loads everything to make it more tax beneficial in earlier years. And then your lower cost basis lots, the ones that you're going to have the most gains on for all your hodlers out there that bought in the early days, you can kind of push those off until your ultimate acquisition or disposition of leaving crypto. And so that's good news. And that's one improvement that we've released to our software now, is users can go in and toggle between first in, first out, or specific identification, and see how that changes their tax answers. So that's exciting.
Awesome.
The
so
other,
to just
yeah, go ahead.
I just want to make sure I get that clear. So let's say, for example, just to put it in terms of, like, let's say I owned a stock, for example. I had bought 100 shares of Apple back in the beginning of the year, and in somewhere during the mid part of the year I bought a secondary pair. If I can prove, in a sense, through specific ID that I sold the second lot of those shares and not the first initial. And in that case, in crypto, everything again has hashes, in this case through transactions. Yep. So that's what you're saying in that case, where we could choose the optimal one to sell.
Yep, exactly. And our software will go in and actually choose the optimal one for you. It's not very user beneficial to go in and have to select all 1,000 of your trades. And so we'll go and pick the one with the highest cost basis lot and then store all the blockchain hashes and transaction IDs on the back end in case IRS ever audits you. Then we have all of that record there. So that's good news for cryptocurrency taxpayers that came out of this guidance. Unfortunately, there was a set of bad news as well that we're fighting against and hoping that we get changed and help along with a bunch of industry proponents. And that is forks and airdrops. Those were deemed to be income at the time of receipt. And so involuntarily now, taxpayers can have an unreported income bill if you received an airdrop or a fork unknowingly or even involuntarily. The fair value of that received coin is deemed to be income by the IRS. And so my thought there is, look, a taxpayer doesn't have control of when they get something airdropped to them. The value of it could tank drastically right afterwards. And so having to report that as income at that value when you don't even have that value anymore, a lot of these airdrops went to nothing, is just not a good answer. And so we've written a lot of articles on this topic, teamed up with a lot of law firms, and we're hoping that there's improvements on that front in the future. But right now, that is the way the IRS is looking at it.
Yeah, Austin, I know we had talked about that. I think it had just happened right when we were talking last in Las Vegas and stuff for World CryptoCon. And I basically brought up to you, I'm like, it'd be as if like there was one exchange that, again, was probably like wash trading its volume and its price action, and it made the value of some random altcoin worth some set of value. And the thing is, the issue with blockchain networks is that they're permissionless in the sense that if I own a public address, someone can send me a token of some value, and I can't prevent them from sending it to me.
Exactly.
So now I have this token that has supposedly some dollar denominated value, and now I have a tax obligation. So I completely applaud you guys for actually pushing forward in that. It showcases you guys are trying to not only build great software, but push for proper policy on this crazy new industry that regulators are trying to keep up with.
100%. Yeah, I am not associated with the IRS. We play by the rules that they assign, and we are taxpayer favorable. Our software is always trying to legally reduce the amount of taxes a cryptocurrency owner has to pay at all times. And then we're also proponents trying to, work with legislature to get better guidance and taxpayer favorable guidance when it makes sense, like this area right here.
Absolutely, man. Now, one thing I wanted to talk to you guys about a little bit in the sense of the platform. How does it actually work for like a user when they're browsing TaxBit? I know later on we'll actually showcase a little bit of the platform in another video, but I want to just kind of get give a brief overview for someone, as to what the process is like.
Yeah, totally. This is a good question. So our software is designed by CPAs, tax attorneys, and software developers. So what our goal was is take all the back-end complexity out of taxes, not to mention crypto taxes, which is even more complex, and provide a user with a front-end interface that anyone can understand. And so how it works is you can sign up on our Data-TaxBit partnership page, and you'll be prompted to then start a free trial, and you can connect your exchange accounts. We API in with all the exchanges out there. If you don't see one for whatever reason, reach out to our support team. You've got live support available to you at all times, and we can add it. And those API keys allow us to pull in your transaction information on a view-only basis. We have no custody to your private keys, no visibility into those or access at all. And so we take security very seriously. All that we can see is your transactional information. That allows us to run it through the U.S. tax code as it applies to cryptocurrency taxes, and then instantaneously populate a full audit trail for you, transaction by transaction, showing your different gains and losses, how everything was calculated, as well as produce your IRS 8949 tax forms at a click of a button. Those are the required set of tax forms that the IRS requires all cryptocurrency traders file each year. And so the software really, it can be a 10-minute process by the time you link everything and click to download your tax forms. Or if you're more curious and financial literate, a lot of people like to poke around and do other things in the software to help them tax plan and optimize for the future. So there's a lot of cool features on that front as well.
Yeah, I think honestly, utilizing the platform myself and stuff, the thing I love is that you've taken a process where someone would literally have to go buy the books and understand basic taxing and accounting methods, or have to go to an attorney or CPA. But in this case, what you've done is basically just take it to where you, just like if anyone's, utilizing other services in the crypto space, you grab your API keys and they're view only keys, so there's no worry about compromisation of trades. Literally plug them into the platform and a clean user experience. I know you guys just launched TaxBit. I don't know if it's TaxBit 2.0, but the new layout is so clean, even compared to last year where it was relatively simple to use. So I think it's awesome, man, that you guys have been improving the user experience. It still has maintained its simplicity, and you guys are always making sure on the back end, again, not putting that stress on the user to have all the newest features and functionality.
I think you hit it right on. TaxBit V2 is a beautiful design, super intuitive, but most of the work behind that actually was back-end work that a user doesn't see. We take great pride in accuracy. Everything we do is immutable, has a full audit trail behind it. As we saw this last year, tens of thousands of crypto traders were audited by the IRS. And so we facilitated many hundreds of those. And so lots of CPAs, IRS investigators have gone through all the ticks and ties of our system, and we've been able to resolve a lot of those audits in the taxpayers' favor. And so that's what is important to us, is the actual numbers behind what a taxpayer is filing.
Absolutely, man. Now, one thing I wanted to talk about and congratulate you guys on was that you recently did a raise for TaxBit. I know on my end and stuff, I've been doing my own startup, so it's an absolute pain to do a raise, as you probably know. But I want to say that you guys have did an awesome raise with a lot of big names in the space. I know the Winklevoss twins as well are part of that raise. So if you want to spend some time to talk about them, man, I'd love to get a little bit more about the details. We were trying to talk about it back in Vegas, I know.
No, we raised just over $5 million from some of the best investors in fintech and cryptocurrency. Winklevoss Capital being among those, Peter Thiel's Valar Ventures, Global Founders Capital, TTV, Album Ventures, Collaborative Fund, Dragonfly, really big names that stick out in the cryptocurrency and fintech spaces. Why we did that was it's really important for us to build the best product out there that can really help our end users. And so the IRS, in addition to their recent guidance, they added a new question on every taxpayer's tax return. And it says, did you engage in virtual currency transactions during the year? 170 million US taxpayers now have to check yes or no to that question. Well, that really changed our industry and our market. Whereas before, a lot of crypto traders said, you'll never catch me, blockchain's hidden, immutable. The IRS is now making you attest to it. And if you check no, and they find you through some chain analysis software or blockchain record keeping tools that they have invested in, they can now prove intent, and it can become criminal and not just fines and penalties. And so we have seen a huge influx in the amount of cryptocurrency users voluntarily reporting their crypto trades. And that's led us to have to scale our platform and infrastructure to be able to handle this wave of adoption and also handle what's coming, because as you and I both believe, this is just the beginning. These are the early days, and there's a lot of cool projects in the DeFi space and everything that's coming to market now that's going to create more tax implications and nightmares that need to be automated in order for blockchain and crypto to progress.
Absolutely, man. You were mentioning DeFi there for a second. I mean, you guys have a whole another handbasket to deal with there at TaxBit, because there's so many awesome like DeFi platforms, but then you have to be able to track your MetaMask wallet and its interactions with these. And what does a trade on Fulcrum mean? And when I'm owning this token that says, some altcoin with 3x, what does that mean? And, so there's all kinds of interesting different types of things that you have to be cautious of. But I'm excited to see how you guys are going to be prepared for that DeFi movement. I'm excited to see that you guys are keeping on the cutting edge of it. So Austin, for people who want to get a little bit more knowledge on how they can go about actually utilizing the platform, if I'm correct on this, you guys offer it where you can plug in your tax forms, and just test it out, and then after that you can actually pay for the plan if you guys want to go through and actually
100%. That's a change from last year. Last year it was a pay before you started connecting things. This year we've got a 14-day free trial. You can go and connect everything, not only connect everything, but see your tax calculations, see what your cumulative gains and losses are for any year going back all of time. And then you'll be prompted to end your trial if you are satisfied and would like to, download those tax forms. And so it's a really good user experience. You can get a feel for everything. You can ask questions to our support team, who's always online answering questions. We want to make sure we're educating people and not just giving them numbers that they don't understand. That's important to us.
Awesome, man. Dude, I think the whole process of simplifying something that seems so complex will be really awesome for a lot of people out there. I'm glad to have you guys as a partner on the channel. And if you guys want to go ahead and actually test out the TaxBit platform, I'll leave a link down below in the description so you can learn more about not only Austin Austin and the rest of the team, but also test out the platform for yourself, start plugging in some of those APIs and seeing what you owe for the year, or possibly if you have any losses, again, being able to write that off and being able to push those tax obligations off if you make future profit as well, which can be great.
You're right on.
Yeah.
We say taxes, but most of our users we've helped generate tax refunds, and so our software will optimize that as much as possible, and you might increase your pocketbook by filing your taxes. So.
Yeah, man. That's what I always stress to people. A lot of people in 2018 or 2019, or maybe some of those out there who have, for example, experimented with trading and they made profit but then took losses. Again, make sure to claim your losses. That's a very key thing here. I think that speaks to the nature of what you're talking about, Austin. We want to make sure we can keep the obligations as low as possible and stuff, but at the same time, make sure we're following things by the books. But Austin, thank you, man, for making the time. It was a great conversation, and hope to see you soon, man, along the way in the crypto world.
Yep, for sure. We'll be in touch, Nicholas. Big fan, and love all your user base as well. So happy to help.
Thank you, man. It's a pleasure to have you here.